Test, perfect. Good morning, everyone. Amazing to see so many new faces. Let's see if some ladies are sleeping late and joining a bit later. There's gonna be a break in the middle, probably around 10:15, depending on the questions that are gonna come. If you need, for whatever reason, to leave early or need to drop out and come back in, it's really flexible because there's also this little networking break of about 10-15 minutes in the middle. So that's why make also sure that your badge is turned so it displays your name. So if another lady wants to speak to you, she knows who she's talking to. So, for those of you who don't know me, I'm gonna introduce myself a bit later as well. I'm from Zurich. My name is Tscherry, and I host educational events for women. I've been doing that for the past 2 years, and last year I was also represented here at beautiful Plan B, so also a big thanks to Plan B for hosting this event. And this time they gave me this 2-hour slot because that's very similar to the format that I'm doing at home, because I think there's a lot of value in also being able to ask questions, which usually fall a bit short in the traditional keynote speeches. Yeah, so today we're gonna focus, as always, on Bitcoin, what its fundamentals are, how it differs from all the other cryptocurrencies out there, and why it is being increasingly adopted around the world as a potential new monetary standard. And then in the end, we'll wrap up with some key takeaways and then obviously also Q&A. However, you can always ask questions also during the presentation. So let's take a look at today's agenda. So after a quick introduction, like I said, I'm gonna dive into the foundational principles of Bitcoin. Then I'm gonna compare it in more detail against other digital assets. We're gonna look at market trends, investment returns, and also adoption globally. And then in the end, a summary and Q&A. So who am I? Again, I'm Tscherry. I originally studied psychology and business administration at the University of Zurich. So I'm from Switzerland. However, a couple of years back, I discovered Bitcoin, and as you might have concluded, I fell in love with it. So much so that I decided to pursue a second master's degree in blockchain and digital currency at the University of Nicosia in Cyprus. I concluded my master's degree in summer of 2023, and I was so dedicated to this program that I was able to graduate as the best student of all of the master's degrees. Thanks a lot. Yeah, because I think that in the beginning I always felt a bit out of place, or that I needed to justify why I was there, because I come from a psychological background and not computer science, IT, or something else. That's why I put a lot of dedication and love into it. And yeah, so I was able to hold the graduation speech in Cyprus in front of the president there. That was also very interesting as an experience. And then I thought to myself, okay, should I go back to my normal life, or should I keep pursuing this topic in Bitcoin? And the answer was very strong and very clear. So that's why in January 2024, I started to host monthly educational sessions in Zurich. I also introduced throughout the time now a webinar in English to just reach more women throughout Switzerland, but also potentially in the EU and also globally. I'm also a board member of the Bitcoin Association Switzerland, where we try to drive the adoption throughout Switzerland. Yeah, but still it's just a hobby because I'm fully employed, so that's why this is a big passion of mine, and I'm happy that you are all here to share that with me. So since I value networking a lot, and I think it's also important that women can support each other, I would like to just start with a quick introduction. So I would suggest that you pair yourselves in groups of 3 or 4, preferably with women that you don't know already, that you quickly introduce yourselves, what brings you here, and what you value about Bitcoin, what it means for you, whether you're a complete beginner or also already an expert. And then we'll continue at 9:30 with the presentation. So go ahead and introduce yourselves. Perfect. I hope you met some amazing new women. So now let's dive into the presentation, and again, you will have another chance a bit later down the line. All right, the image that is shown here shows the title of the famous Bitcoin white paper introduced by Satoshi Nakamoto. This white paper laid the foundation for this groundbreaking discovery of Bitcoin in 2008. It marked the beginning of an entirely new era of digital money that operates independently of traditional financial institutions. What's important to note here is that this one is not laid in stone, so it means that it laid the vision and also groundwork for Bitcoin, but the system is very dynamic and can be updated through consensus. And this is also what's been done, right? Bitcoin is continuously evolving as it adapts to new challenges and also innovations that are introduced in the market. So that means it can still always remain in line with its decentralized ethos. Bitcoin was introduced in 2008 by a group or person under the pseudonym Satoshi Nakamoto. It is the first and most well-known cryptocurrency based on blockchain technology, which enables decentralized and secure transactions. The term Bitcoin actually has three meanings. So on one hand, it's money, so it's a form of digital currency that can be used as a means of payment in this decentralized network. It operates independently of governments or central banks, allowing peer-to-peer transactions. At the same time, it's also the software. It's specifically an open software that runs on computers worldwide. The software enforces the rule of the Bitcoin protocol, such as the maximum supply of 21 million coins. And thirdly, Bitcoin also means the network. So Bitcoin is a network of interconnected computers worldwide, exchanges, people operating on it. So that means that it's really also a new Bitcoin economy that is being created here. And the network enables direct transactions between the users, eliminating the need for a central authority like a bank. It ensures the security and integrity of the system through consensus mechanisms. When we talk about key principles, they are very important to understand in order to also understand why Bitcoin has become so valuable and is increasingly being adopted globally. So first and foremost, yes, it is still a technology at heart. So I think you don't need to understand the technology per se in order to understand the idea behind Bitcoin. However, once you become passionate about it, I think you will not even mind the tech part of it. And it's always interesting also to look at it on a superficial level. So Bitcoin operates on a public, decentralized ledger called the blockchain, which records all transactions, ensuring that no single entity can manipulate or alter the transaction history. Bitcoin operates without a central authority, relying on a peer-to-peer network to process and verify transactions. There will only ever be 21 million Bitcoin, ensuring scarcity and protecting against inflation. No government, institution, or third party can control or block Bitcoin transactions, at least the ones that are happening directly peer-to-peer, making it a tool for financial freedom. Bitcoin's network is secured by miners. Miners are specialized computers that solve mathematical problems, and they use the proof of work consensus mechanism. Maybe you have heard of that before. It's oftentimes cited in the media as being very energy intense. We can also dive into that a bit later or during the Q&A if you have questions to that. So it's just important to know that Bitcoin uses this consensus mechanism called proof of work, making it nearly impossible to attack or manipulate the network. Bitcoin eliminates the need for trust in intermediaries, such as banks or governments, by relying on transparent, open source code and cryptographic verification. All transactions are recorded on the blockchain, which is public and immutable, ensuring permanent, verifiable records. These are the foundational principles of Bitcoin. However, what exactly makes Bitcoin valuable? There are a couple of characteristics that I like to mention here. And by understanding these characteristics, I think over time it makes sense to understand why Bitcoin is increasingly becoming so valuable. So first of all, Bitcoin is permissionless. That means that anyone can use, send, or receive Bitcoin without requiring approval from a central authority like a bank or government. This might not seem super necessary here in Switzerland or also in European countries. However, there are a lot of countries throughout the world where women, for example, don't have access to a bank account or only with the signature of their husband or a brother, or then there are certain religions or minorities that are being excluded from the banking system. And this is why Bitcoin is often said to bank the unbanked, so all the people who don't have access to traditional banking, allowing them to participate in an international monetary system for the first time, actually. Second of all, Bitcoin is neutral, so it does not discriminate between users or transactions. Everyone is treated equally. The rule applies to everyone, regardless of origin, status, or political orientation. And some might say, yeah, but what happens because criminals will also use it? Yes, I mean, Bitcoin solves a lot of problems, but there will still be problems even on a Bitcoin standard. However, it's one of its features that it's neutral so that everyone can participate, and that also includes malicious actors. That is not per se a fault of the system, it's just a feature of being an open, neutral network. It is also sovereign. That means Bitcoin gives users full control over their money. There is no central entity that can block transactions or seize assets. Each individual owns their Bitcoin independently through their private key. And this is especially relevant in nations where you have, for example, bank runs or where banks have introduced withdrawal limits, so citizens cannot really access their money anymore. It always seems so unlikely until it happens. So with Bitcoin, if you control the private key directly, you control your wealth and your assets directly. Bitcoin is also portable, which means it's fully digital and can be transferred worldwide within seconds. Unlike cash or gold, it is not bulky or difficult to transport. So 1 Swiss franc worth of Bitcoin is equally heavy as 10 or like let's say 21 million Swiss francs of Bitcoin, which makes it very portable. And I believe you could not cross borders with gold worth 21 million. So that's why it makes it a super important tool also for political refugees, war refugees who have to leave everything behind. And now they have a chance to take their wealth with them across borders. Bitcoin is also open source. That means its code is publicly available and can be reviewed or further developed by anyone, at least anyone who can write and read code. This ensures transparency and security as there are no hidden mechanisms. Bitcoin has been up and running for over 16 years and is constantly being monitored and checked by thousands of people globally, ensuring that there are no hidden mechanisms or trap built into the protocol that would one day, for example, collect the private keys of everyone. That would have been discovered until now. Bitcoin can also be divided into tiny fractions. This is something not everyone knows. So there are a lot of people who say, yeah, okay, now with Bitcoin being above 100K in either Swiss francs or dollars, no, I mean, a normal person cannot afford a Bitcoin anymore. We're priced out, it's too late. However, Bitcoin is divisible into very small units. The smallest unit in the network is called a SatoShe, called after the founder. And that means if you have even just 1 Swiss francs, you can convert it into Bitcoin and then just receive the tiny fraction in SatoShes, which makes it very usable as a either a savings tool, but also as a tool for currency, because you can pay your house with Bitcoin, but you can also pay your coffee with Bitcoin. And I think this is very important to know if you have ever had any doubts on whether you can afford to start saving in Bitcoin. This should probably answer it. Bitcoin is also scarce, meaning that there will not be more coins than 21 million Bitcoin. And this fixed supply makes Bitcoin unique compared to the currencies that we use nowadays, which can be printed endlessly, leading to inflation. And thus, Bitcoin should protect against inflation. And last but not least, Bitcoin is also borderless. That means it operates globally, independent of geographic or political boundaries. Transactions can be made anywhere in this world without reliance on banks or exchange rates. I mean, yes, also traditional finance is getting a bit more modern these days. But I mean, a couple of years ago, if you wanted to send some money to your family overseas, the bank probably took a quite big chunk in fees from that money, and depending on how much money you have available to send, I mean, if you are saving and all you can afford is $100 that you want to send to your family, and the bank takes $20 in fees, that's 20% of the money that the bank takes, which is a lot for people who do not have a lot of money. So all these characteristics that I mentioned are super important on their own, but also in combination, because this is what makes Bitcoin truly unique and valuable. And I think the more one understands money in general and how the world operates, the clearer it becomes why these properties are so important and inherently valuable in themselves, ultimately giving Bitcoin its worth. So, however, there's not only Bitcoin. There are also a lot of other assets out there. And I think for those of you who are not familiar with why Bitcoin differs from other currencies, or if you think that Ethereum is just a cheaper version of Bitcoin, this part is very important to me because I can give you a lot of facts as to why Bitcoin differs fundamentally from other cryptocurrencies or tokens out there. So many people mistakenly group Bitcoin and altcoins, so alternative coins, together under the broad term cryptocurrency. This leads to confusion as they believe that Bitcoin is just another type of crypto. And the common perception is that Bitcoin and altcoins are on the same level, both competing with fiat currencies. For those of you not familiar with the term fiat currency, it basically is just a term for all of the currencies that we use today, so the US dollar, the euro, that are backed by nothing but the trust in the emitting government. And they see Bitcoin as just one more player in the crypto space. However, in reality, Bitcoin stands in a league of its own. It's not just another cryptocurrency. It's the dominant digital asset and a new form of money, independent from both fiat and altcoins. Bitcoin is the only truly decentralized, global, and trustless monetary system, whereas altcoins often serve niche purposes or act as experiments in blockchain technology. Now we are going to dive into this a bit more in detail. So, a question to the audience. How many cryptocurrencies do you think are there? Just a wild guess, everything is acceptable. Anyone wants to go first? 2,000? 50,000? 50,000? Anyone want to go higher? 1 million? Okay, getting there. So apparently, according to CoinMarketCap at least, it currently tracks over 25 million cryptocurrencies. And The total number of tokens is much higher because not all of them are being tracked, and some estimates suggest that there are even over like 36 million tokens available, a figure that has grown substantially from levels fewer than 10,000 in 2017. So there are a lot of experimentations out there, and I mean, if you look at that number, the question arises at first, how am I gonna pick the one that's gonna make me millions, right? And I would strongly suggest, and you will probably too after this presentation, that it probably makes sense to just focus on Bitcoin, because with so many tokens out there, it's really difficult to pick the right one, whichever that would actually mean. However, the question is, why are there altcoins in the first place? Why are there alternatives to Bitcoin? There are a couple of theories of that. So first of all, altcoins were created to address perceived shortcomings in Bitcoin, such as transaction speed, scalability, and programmability. For example, Ethereum introduced smart contracts, enabling decentralized applications, while other tokens focus more on privacy, energy efficiency, or faster transaction processing. Although they can all be debunked, I'm going to say that much already. Then secondly, scalability is a key area where some altcoins use different consensus mechanisms that sometimes offer faster transaction speeds. However, there are solutions on Bitcoin, like layer 2 solutions like the Lightning Network, that enhance scalability and enable super fast, low-cost transactions without altering Bitcoin's protocol. Altcoins often focus on niche markets or solving specific problems that Bitcoin doesn't directly address. For example, there are some tokens who focus on cross-border payments, or like energy efficient blockchain solutions. They also serve as a testing ground for new blockchain innovations and applications, with, for example, Ethereum pioneering smart contracts and others focusing on privacy, supply chain tracking, decentralized storage. So, I mean, there's a token for almost everything nowadays. And then also Bitcoin's decentralized governance relies on consensus from miners and node operators, which may be slower. However, that is, again, a feature of its resilience and security. And some altcoins offer on-chain governance with faster, more dynamic decision-making through voting mechanisms. So there are also several types of altcoins. It's not just one bunch of 25 million tokens. They can actually be divided into different use cases. So first of all, we have utility tokens. They are used to access services within a specific platform, for example, Chainlink. Then we have security tokens. They represent ownership in an asset, company, or investment. I found a token called Spice VC. And then stablecoins, pegged to traditional assets like fiat currencies, for example, the US dollar. I mean, Tether there is obviously a famous example. They're also sponsoring this conference, right? Then we have meme coins. They are often created as a joke or parody with little practical use. Dogecoin became very famous here. Then we have governance tokens. They allow holders to participate in voting on decisions in decentralized platforms like Aave. Then we have forks, although you could argue if they're really classifying as tokens. However, it's just a split from an original blockchain, creating a new version. So for example, the original Bitcoin chain since its inception has been split into several like soft and hard forks. We don't need to get into details here. However, there was Bitcoin Cash that was being created because they somehow wanted to improve Bitcoin. However, if you look at the market cap of Bitcoin and Bitcoin Cash, you can clearly see what the market value is more. And then we have privacy coins. They focus on providing anonymous and private transactions, for example, Zcash. A disclaimer, right? I am not endorsing any of the tokens or coins that I'm showing here. I use these merely for demonstration purposes so that you understand what's out there, because that in turn will help you again to understand why Bitcoin differs from them in the end. So I will also not provide an in-depth analysis for like pros and cons. I just want to show different use cases. More examples. Litecoin, it was founded in 2011 by Charlie Lee, and it's actually also a fork of Bitcoin. There was in the past this narrative of Bitcoin being the gold and Litecoin being the silver, whatever that's supposed to mean. However, again, the market has also clearly shown which it values more. Litecoin was designed for faster and cheaper transactions. They have a 2.5-minute block time compared to Bitcoin's 10-minute block time, but they also increased the total supply to 84 millions to make it easier for everyday payments. But again, it doesn't really make sense. Then we have Ethereum, co-founded by Vitalik Buterin in 2015. It was created to extend Bitcoin's blockchain technology beyond just it being a currency, introducing smart contracts and decentralized applications, and also allowing for an inflationary creation of tokens being created on top of it. Ethereum used to have the same consensus mechanism as Bitcoin, or a similar proof of work, but it transitioned to proof of stake, which actually weakened its security mechanisms. So Ether is actually just a currency to fuel transactions on the Ethereum network. Then we have Filecoin. It focuses on decentralized data storage, allowing users to rent out storage space. Interesting, when it came out, I don't even remember when, it was super hyped, and I think it went from like $1 to $200 within a couple of weeks, but ever since it has crashed like 99% in price, and this is probably what happens to almost all of the tokens out there. However, I mean, they were trying to solve a problem, but they just didn't find the market application yet. Then we have Ripple, founded by Ripple Labs in 2012. They aim to improve international payments with fast, low-cost cross-border transactions, but they focus on banks and payment providers. And then another example is Cardano. Charles Hoskinson founded it in 2017. He was actually a co-founder of Ethereum. However, they had a dispute within the co-founder group, which is why then he went on to create his own blockchain, which also shows that, I know I'm being recorded, but there's sometimes also ego involved in creation of all these blockchains. Good, so spot the difference, right? Short and sweet, I mean, Bitcoin in its original form or with its original idea was designed to remove the need for intermediaries, so third parties, in financial transactions. And the entire value proposition of Bitcoin centers around its decentralization, where no central authority or third party can control the network. And in contrast, many altcoins, despite using blockchain technology, have actually reintroduced trust in third parties. So even though from an outside perspective, somehow this is all the blockchain world and they all more or less run on blockchains, even though not all tokens do, they are fundamentally different. And I really want to emphasize how important this differentiation is. And in my opinion, it's also not just a technological differentiation, but rather really a philosophical one. Bitcoin seeks to create a trustless system, whereas many altcoins compromise on this principle for other features or efficiencies. So let's dive even further down into this topic. I'm going to show you some of the differences in more detail. So like I said, Bitcoin has a fixed supply of 21 million coins, meaning that no more can ever be created, or it is just really, really unlikely that the majority of the players in the space would agree to an increase, and that ensures that Bitcoin protects against inflation. And in contrast, many altcoins do not have a capped supply, meaning more tokens can be created at will, leading to inflation, and this would then also dilute the value over time. A bit similar to what is happening with the inflation of our traditional currencies. Bitcoin, like I said, is decentralized, permissionless, and available to everyone globally from day one. It has no central authority, and anyone can participate in the network. And many altcoins grant early investor privileges, often to insiders or venture capitalists. And this means that early adopters gain a significant advantage over the retail investors. Then Bitcoin can, we can say that its value emerged very organically without any pre-mining, ICO or venture capital funding. It has grown steadily since its inception because more and more people wake up to the fact that it's very valuable because of its features. And in contrast, many altcoins rely on ICOs, so initial coin offerings. It's like the crypto pendant to IPOs, so initial public offerings when stocks want to go public, companies want to go public, or then venture capitalist funding. Bitcoin's launch was fair, with coins still being mined gradually, still being produced, and available to anyone from the start. There was no pre-mine of like 21 million Bitcoin. They don't all exist yet. They are being created slowly throughout time, and that ensures a level playing field for everyone. And many altcoins, in contrast, are either pre-mined, so all 80 billion tokens already exist, or we see a significant accumulation by founders and insiders. And just to make that a bit more visual, I brought a chart to demonstrate that. So here you see many altcoin projects, and there you can see that projects like Solana, which is pretty known, right? Celo, Avalanche, they show over 40% of token allocation going to insiders, compared to relatively smaller portions dedicated to the community or public sale. So in the beginning, the founders, venture capitalists, early investors, they get like 20, 30, 40% of the tokens. Let's say, I'm just gonna say something, I mean, I didn't look up a particular project. Let's say they get it for one token for $0.1, and then they kind of market the token so that it gets listed on a public exchange like Binance, Coinbase, where the token is immediately sold for $1 listing price. So meaning that the early insiders, they have an immediate times 10, and then they dump all their tokens on the market. They go out, they walk out with a nice profit, and the retail holders are left with the tokens that basically don't have a lot of value. So I think this is very important if you want to dive into other projects, that you do a very, very thorough analysis on the structure, etc. But probably just stay with Bitcoin. Yeah, then it goes on because there are many differences. So over the years, Bitcoin has built a strong reputation as a reliable, decentralized, and trusted store of value, while many altcoins have unfortunately been linked to scams like pump and dump schemes and rug pulls. So for example, there's a good recent example. So Cadena is a token that did something, and then the developer team, after a couple of years, declared that they are abandoning the project. They are going to do something else. So the core developers said that they were retreating, and I mean the token like plummeted like 90% since that announcement, showing that, yeah, I mean, who knows if that was the intention from the beginning from the core developers to launch a token, get rich, and then leave it to the poor retail investors who are still holding the tokens. Yeah, so not saying that per se was a scamming project, I don't know enough about it, but there are certainly tokens being created just for that purpose. They're being created, marketed, sold, and then dumped on the innocent retail investors while the creators walk out with a lot of money. So that's why scams, pump and dump, and rug pulls. Bitcoin is steadily being adopted by institutions and governments, whereas many altcoins still struggle to find a real-world application beyond speculation and trading. I mean, so far we have one major ETF focusing on Bitcoin. Yes, there are other crypto ETFs being discussed. However, Bitcoin is certainly the one cryptocurrency that gets named again and again for strategic reserves, ETFs, and global adoption. Bitcoin takes a very conservative, security-focused approach to upgrades, ensuring stability, but yes, it might appear slower compared to the constant experimentation in the altcoin space. However, many altcoins often prioritize faster changes and experimentation, leading also to a lot of volatility. Bitcoin is increasingly seen as a global form of money, with growing adoption across nations, businesses, and even, as a short period at least, legal tender in countries like El Salvador. While the sheer number of altcoins that I mentioned before, and their often very speculative nature, create a lot of noise in the space. And many are distractions from the core innovations in blockchain and financial decentralization that Bitcoin is pioneering. And I brought another chart to visualize just that. So this chart illustrates the performance of over 2,400 coins, with Bitcoin being represented by the clear black dotted line. And you can notice how Bitcoin remains strong and consistent over time. And then the chaotic and colorful lines in the middle, they represent the altcoin market. And most of these coins experience very sharp fluctuations, underperformance or complete declines over time. And you can see, right, so on the right-hand side, you have the Bitcoin price, so measured in Bitcoin. They almost all tend towards zero over time. And that shows how much noise all this altcoin space creates. However, you can really actually, or you should, focus on the signal that Bitcoin is providing and its steady trend upwards. So that's why when you think about investing or exploring cryptocurrencies, I would strongly suggest that you focus on Bitcoin as the signal amidst the noise of very short-lived speculative altcoins. And then last slide with the differences. While Bitcoin's creator, Satoshi Nakamoto, remains anonymous, many altcoins are led by known founders, and this centralizes power and decision-making. And I mean, I'm going to take Ethereum as an example. I mean, they always claim that they are also decentralized, if not even more than Bitcoin. However, its founder, or one of the co-founders, Vitalik, I mean, he's a super prominent figure in the space. And if he suggests that the protocol should develop in a certain direction, it's most of the time being done that way. Because he just, I mean, of course, he's a brilliant guy who came up with this blockchain solution. However, he still centralizes power with his decision-making capabilities. And this is why Bitcoin is really different, because decision-making needs to be done in consensus with thousands and thousands of parties involved. That might appear slow, like I said. However, it ensures that only the best improvements are being implemented in the protocol. Like I said, Bitcoin had no pre-mining, but then there's also lock-up schemes. That means if you buy, or investors, if they buy tokens with altcoins, that they might be locked for a certain period of time. That creates artificial scarcity, driving price up. And then after 12, 16, 18 months, the lock-up period ends and early investors are able to cash out. So that, again, drives the price up. However, with Bitcoin, there's no such thing as like lockup schemes. Everyone, I mean, it's fully liquid 24/7. And that really shows the fair market distribution. Bitcoin's adoption has been slow and steady, really driven by its long-term value proposition, while many altcoins quickly rise due to hype, marketing, or speculation, making them more volatile. And in the end, I mean, Bitcoin has a strong ethos centered on decentralization, financial sovereignty, and security, while many altcoins, especially meme coins, for example, often lack real-world utility and are driven by internet culture or controversy. And this contributes also to their volatility and can detract from the serious technological advancements in this space or in Bitcoin in particular. So that's why I want to introduce you also to a fun but powerful metaphor in the Bitcoin world, the orange pill. So this image plays with the idea to waking up in a new reality, much like the red pill in the Matrix. But this time it's about money. So it's a call to explore, to dig deeper, to ask, what is money? Who controls it? And could there be a better way? And Bitcoin is often portrayed as a cure to a lot of societal problems that we have. I do believe it will solve a lot. It will in the end not solve everything, but it would certainly contribute to a fairer world out there. So I think this is a really nice picture that you can also study in your free time, because I think it condenses a lot of the core ideas quite well. So whoever wants to take a picture, now's the time. You can also Google it, obviously. I didn't create it. Yeah, perfect. And then here another picture. So Bitcoin has a founder, but no known founder. It has no ruling foundation. It has no office. It has no website. It has no marketing team. I'm doing this voluntarily. It has no starting price and is up until now the fairest money on earth. And there simply is no second best, as Michael Saylor and also Jack Mallers repeatedly tell us. So in conclusion of this part of the presentation, I strongly urge you to pay close attention to Bitcoin and invest time in understanding its value and potential. Instead of getting caught up in trading altcoins or speculating, consider whether it makes sense for you to focus on saving and preserving value in Bitcoin, a decentralized, secure, and resilient monetary asset that has proven its strengths over time. Are there any questions or comments so far? Anything that surprised you that you were already able to take away? Don't be shy. Yeah?
I'm happy that you mentioned
yeah, sorry, there's a microphone, sorry. I didn't know. Yeah.
Sorry.
for the recording. Yeah.
I'm really happy that you mentioned the difference between crypto and Bitcoin and the standout of Bitcoin, because mostly focus on crypto is also part of investment, and so I'm very happy to hear that from you. Thank you.
Thanks. There was another show of hands.
Thank you. You just mentioned that Bitcoin is permissionless, and that means that governments cannot control it, but can actually governments prohibit it?
That's a good question. Yes, they can, in theory. However, the question is what happens in practice, and if citizens are then really adhering to that prohibition. Because in the end, as long as you transact peer-to-peer, the transactions cannot directly be censored, right? And there are also possibilities that people could then decide to leave the country that puts up the ban because they believe in freedom. And I mean, also from like a geopolitical perspective, countries that ban it, they probably become unattractive, like flight of knowledge, of like young people who do not want to let themselves be controlled towards other countries who have like a more softer stance towards Bitcoin. So yes, I mean, bans have happened in the past. However, only very, very few countries have introduced it, and also, I mean, they have not really implemented it that well. So it's really hard to do it in practice. And I mean, there's also the important distinction between Bitcoin, the network itself, and all the third parties around it. So for example, nowadays you probably start with going on an exchange. You have to verify your identity in order to send money on the exchange and buy your first Bitcoin. That's, not unfortunately, that's how many people get started. And in theory, these third parties, they can be controlled by the government. And for example, the CEO of Kraken also once said that if he has the obligation by the government to hand out user data or to censor transactions, he will have to oblige it in order to stay relevant and operating, because otherwise the government would shut down the exchange. So that's why, like, in the ecosystem, third parties can be controlled and censored, but not necessarily in the Bitcoin network itself. Does it answer your question more or less? Any comments on that? But Bettina?
I have a question. Wait.
Oh yeah, sorry, microphone, sorry.
Hello. I have a question. 2 days ago, I read that the SatoShe wallet was moved the first time. Was that a scam?
Was moved?
Yeah.
What
So,
was moved? Or
You know,
the coins of
Satoshis.
sorry, I was
his coins.
I was thinking about
and
like wallet of
nobody
Satoshi.
has the key for his coin.
Uh-huh.
So is he awake now?
Did you wait?
And when he takes all his coins, what happens?
To be honest, I didn't read that article. I would need to verify the source first, and also the what's being said exactly, because it could also be that something happened that is being misrepresented. So I would have to look into it maybe during the break and then see if I can comment on it, because I didn't read about it. Yeah, but feel free to send it to me. We're connected, right? Yeah. Another question, Isa? Oh, sorry, over there first.
Just piggyback on what she had said.
Yeah.
So it all goes back to him, Koshi.
Satoshi, yeah.
So Koshi, it all stems back to him.
Yeah.
Okay.
I mean, yes, I mean, this was in theory the group, in practice the group or person that created the code and the protocol.
Okay.
And this person or group mined and created a lot of Bitcoin in the beginning to get it out there, right? And in theory, there is still an address that has a lot of Bitcoin on it, and whoever has the private key to this address could unlock all the Bitcoins that are there. However, it is very decentralized, so that there are also lots of discussions on what would happen to the price and also the network if, for any reason, a person would be able to access all of these coins.
Okay. And my question would be, for one who has not, does not have a Bitcoin, how do you get started?
That's a good question. There are actually a lot of ways. It's not really part of today's presentation. I do a lot of presentations also on how to get started, because it's a very valid question. However, before I recommend something, what I do is to explain what are exchanges, what are wallets, what are best practices, how do you do it securely, before I would ever mention a certain name or recommend something. However, we can gladly speak during the break, and I can give you some first hints as to how to get started. Yeah, perfect. Another comment or question?
Thank you, Lisa, for the presentation. Maybe my question goes back to the control. As we know, many governments or the US states want to stockpile on Bitcoin. And let's assume if they take as many Bitcoin as possible, is it possible that at some point they can take control in a way that we have as many as possible? Yeah.
I mean, the thing is, there are already 19.62 something Bitcoin out there, right? Like 96% of the supply has been mined. So up until the year 2140, we will reach the limit of 21 million Bitcoin. So up for sale in zero or newly created Bitcoin are only like, maybe 2 million left. So the question is, how much would the government actually be able to get? Like, which price would people be willing to sell their Bitcoin for? So would they even, would they in practice actually be able to amass enough Bitcoin needed to control the majority of the network? But then there's also like the mining companies with the hash power who control the network, and they would also have to access 51% of the hash rate of the miners in order to basically change the protocol. And this is very, very unlikely, because as of now, the mining economy is so big that it is very hard to get a majority stake of the hash rate. So in theory, there are lots of attacks possible, and there's a lot of literature also that you can find on this topic. But I'd say at this point in time, it's very unlikely. It would have probably been more likely in the beginning, when it was not so widely spread, not so decentralized, not so many actors involved, where it was easier to amass larger amounts of either Bitcoin or hashing power. However, it is highly, highly unlikely. And then the question would also be, what would they do if they had the possibility to change the network? Would they create just double the Bitcoin? That would dilute the value of them holding coins directly, and it would not serve them any purpose. So that's why you really have to think about what would they actually want to achieve. So we can we could discuss about like probably all of your questions for hours on end. So I'm just trying to keep it superficial, but still trying to answer your question. So okay, more or less. Yeah, perfect. Thumbs up. There's a question in the back already, and
Thank
then
you,
we'll get
Lisa.
to you. Yeah.
I just have a question
Yeah.
about the smart projects.
Yeah.
And if you can just tell us a little bit about the layer 1, 2, 3, the differences.
In Bitcoin, you mean?
The smart project around, the stable coins, if you can just go back quick on it.
So I'm not really going to talk about stable coins because they are not Bitcoin.
But
However,
you talk about the smart projects.
the smart projects in Bitcoin, you mean?
Yeah, in Bitcoin, for example.
So
The layers,
Okay, so for example, the main chain is the Bitcoin network with a block time of on average 10 minutes. And there is only a certain amount of transaction that can be recorded in one block. And then that means that the scalability in the beginning has also been criticized a lot, because they were always comparing it to Visa transaction times, etc. However, there has been like another layer solution, the Lightning Network on top of it, where you basically open channels between different entities or users, where you can send sats around at very low cost. And they are not being recorded on the main chain. Only if a channel is closed is then the transaction, for example, being recorded on the Bitcoin blockchain itself. So meaning that you can send, so I'm going to open a channel with you, and we need 100,000 francs in order to transact between us. So I'm going to send one coin to open the channel, and then we can transact back and forth. I'm sending you half a Bitcoin, you send me 0.25 back, etc., until we then settle on the final transaction, which leaves me with half a Bitcoin and you with half a Bitcoin, because we're not going to transact anymore. And then we can close the channel, and then only the final transaction or wallet balance, address balance is being recorded on the Bitcoin blockchain. And that opens up a lot of new possibilities of like thousands of transactions happening at the same time. So that is one of the solutions. But there's a lot of innovation in the space, and there's a lot being built and tried out, and it's really like trial and error. However, it's survival of the fittest. The solution that makes sense is gonna survive and be adopted by the market. Hope I didn't confuse anyone, but you can just ignore it if it doesn't make sense. Yeah. Another question? Wait, yeah.
Just concerning the control of the third parties and
Yeah.
etc. What if Michael Saylor sells all his Bitcoins at once? What is his? Why is he doing that?
Yeah. So for those of you who don't know, Michael Saylor has a company called MicroStrategy, and he has basically turned it into a Bitcoin treasury company It used to be a software company, but now he focuses mainly on amassing as many Bitcoin as possible, with a lot of like underlying products that he's also offering to the market. And he controls, he owns a lot of Bitcoin. Lucky him. Again, like, the question would be first, like, why would he want to sell them all at once? What's his reason? You don't need to answer it. I'm just like thinking for myself, right? Why would he sell them all at once? It's probably unlikely. And he believes a lot in Bitcoin. I think something must happen for him to lose conviction, like a major bug in the protocol that is being detected. However, that for example really nulls all the characteristics that I showed you. For example, if there is a bug that somehow Satoshi Nakamoto is still alive and in the end he will collect all your private keys and all your Bitcoin, that would mean like the network will get worthless and it will get dumped on the market and everyone is going to try to get out as quickly as possible. And then, yes, people will have lost their money. But I don't think that it's a likely scenario. And then we have to ask ourselves, like, why else would he sell? And yes, if he now decides to sell all of his Bitcoin, the market would simply absorb it. The price would tank, yes, but then it would slowly be redistributed amongst the population for everyone who wants to join, because if the core characteristics are still intact, it would simply get absorbed. It would be a short price correction. However, as the market gets bigger and bigger, it will also have like less and less of an impact. But again, this is also being discussed a lot by a lot of people because many see MicroStrategy as a risk. You can tackle it from very, very different perspectives. So I'm also not really able to give you like a conclusive answer, but just trying to point in different directions. You need to speak into the mic again if you have a follow-up.
Do you know how many Bitcoin?
I don't know by heart.
Strategies
I could check. Does anyone actually know by heart just now? I would have. Yeah, he's the largest holder. I can check in the break. We will have a break just now, and then I can tell you, or everyone. I need to check again. So in conclusion, and then we will dive into the break. What I want to say is, like, yes, interesting projects exist. There are many dubious projects, but there's still a lot of innovation going on, which is also fun. And whatever's going to be successful can also be adopted in the end by Bitcoin because it is adaptable. And in my opinion, the altcoins resemble much more like stocks or like penny stocks that people can invest in. So parts of companies, instead of stocks, you have tokens. Which means it's just not as decentralized as Bitcoin. And like I said, as a conclusion, they lack Bitcoin's core ethos of decentralization and censorship resistance. And now I believe it would be time for a break. So use it. I wanted to have coffee and croissants in the room, but unfortunately I was not allowed. So sorry, ladies. I was not able to convince the organizers to let us eat in here. I will try to change it for next year. However, still use 10 minutes to like shake your legs, buy a break, get something to drink. If you need to leave, also fine. I hope you had a nice break and some nice conversations. I love the fact that so many questions are coming in. I think many of the questions that I received during the break would have been super valuable, obviously, for everyone. However, I will exist also after this presentation, hopefully, so you can try to catch me. So I have my cards here in front of the table. If you want to connect with me on LinkedIn, I also have a website where I show the upcoming events. So I will show you also on a slide, but basically next week on Wednesday, there's actually already my next event in Zurich. For those of you who might want to join physically, I also offer webinars in English. Always happy also to go to companies to do something for women if you feel like this is something that you could bring back to your company. I mean, I just love talking about Bitcoin, so whatever pops up, you can contact me. All right, enough of the marketing. So we have explored why altcoins emerged and some of their unique features. But now let's focus on how the cryptocurrency landscape has evolved in terms of market capitalization. And here you can see that Bitcoin is consistently number one in terms of market capitalization, and the market has hence clearly decided its value, while many altcoins have come and gone. This is reinforced by Bitcoin's network effect, meaning that the more users and transaction it gathers, the stronger and more valuable it becomes. And as the most widely used and trusted cryptocurrency, Bitcoin benefits from its massive user base, transaction volume, and unparalleled security and resilience. So I think its first mover advantage and the robustness of its decentralized network make it the strongest contender in the cryptocurrency space for being a monetary asset. So now that we have looked at the market cap of all cryptocurrencies, let's put Bitcoin in the broader context. And here you can see the chart that ranks the largest assets in the world by market cap, including companies, precious metals, and cryptocurrencies. And you can see that Bitcoin is not just leading amongst the cryptocurrencies. It ranks number 8 globally, or at least it did a couple of days ago. Sometimes it fluctuates a bit between number 9 and number 7 at the moment. So it means that within just 16 years, Bitcoin has grown into a $1 trillion asset, competing with giants like Apple, Microsoft, and Amazon. Gold remains for now number 1 in terms of store of value, but Bitcoin is emerging as a digital alternative. And there's also this countdown in the Bitcoin space as to how long it takes until Bitcoin will be number 1 here. So despite its volatility in the short term, Bitcoin has outpaced many major companies in market cap growth over the past decade. And this demonstrates that Bitcoin is no longer a niche asset. It is establishing itself as a global financial asset. And now to a statistics. So 20% apparently of Gen Z women think that Bitcoin is the best long-term value investment. Not bad. I mean, kudos to those 20% already. Hope we can get the number up and also get it up across different generations. However, here you can really clearly see the trend. And I mean, you know, like, why am I doing this here? And for everyone who has walked outside and seen all the guys out there, I think it's the best marketing for what I'm doing, because I really believe, like I had this conversation also in the break, like Bitcoin for me is not just an investment. It is really potentially the new monetary system. And I mean, everyone and all the genders today use money, because money should be just a means of exchange and store of value. But because of our broken monetary system, we didn't have any alternatives so far, or at least faulty ones. And now with Bitcoin, there are really new possibilities. And I mean, if Bitcoin is ever going to be like the global monetary asset that everyone's going to use, obviously women have to use it as well. And this is why I'm happy to see already more women here this year compared to last year. But I'm still waiting for the day where I can fill this room or even another stage. So make sure that you also talk to all of your friends, female friends, daughters, mothers, mother-in-law, sister-in-law, cousins, so that they really understand the importance to at least have a superficial understanding of what's coming. Yeah, that was a serious note that I had to give here. So anyways, now looking at another graph. So between 2014 and 2023. A traditional 60-40 portfolio, so 60% stocks, 40% bonds without Bitcoin, returned 71%. So that's unfortunately the pointer doesn't work really. So that's why it's the line below. So the orange line below, 71%. And by allocating just 5% to Bitcoin, so reducing 3% stocks, 2% bonds in proportion, the return, the cumulative return over this time period has grown to 157%, highlighting Bitcoin's significant impact also on portfolio growth. And just to show how powerful of an asset it is, again, obviously, I forgot that, no financial advice, huh? Just to have that recorded as well. No, so if we look at Bitcoin's overall cumulative return, you can see that it's clearly number one up there with 11,836% and an annualized return of 54%, followed by stocks on second place. Not sure why we have so much traffic right now. I think my bouncer is gone. Sorry guys, it's a women-only event. My bouncer is gone. But nice try. I need a bouncer. Perfect. So last year I was really mean because there was male staff that wanted to enter the room and I almost didn't allow them to take pictures. And this year they told me you need to let them in so they can do their job. And I was like, maybe they're photographers, but I don't think so. So help me in bouncing a bit at the door. Yeah, so I mean, just compared to, like stocks, second place, gold, high yield bonds, emerging markets, etc. I mean, it's outstanding, Bitcoin's return. And yes, that's why it has been in the media a lot with its volatility, with its initial price gains. And that's all great, right? But in the end, again, it's not about Bitcoin being an investment for high potential returns, but really being Bitcoin as a safe haven in a breaking monetary system. Yeah, so yeah, still impressive though. And now there is a very interesting narrative in the media that I wanted to show you, that I brought along. So starting 2010, we can see that Bitcoin has been often underestimated for years because it was laughed at and dismissed. But there's slowly and steady acceptance. So 2010, if you read newspaper articles that mentioned Bitcoin, it mostly said, "Pooh, there's this new thing called Bitcoin. No one uses it." In 2012, only computer nerds use it. In 2013, it was the drug dealers, because drug dealers used it. So that's how actually back then it started to be connected to illegal activities. Because yes, you could use Bitcoin to buy some drugs on a shady drug exchange. And then in 2014, the narrative changed yet again to only money launderers use it. And then in 2017, it was only the gamblers that dared to delve into Bitcoin. And then in 2019, it was getting a bit more difficult, so only a small percentage of the population uses Bitcoin. In 2020, it was only small companies that use it. So, which small companies are we talking about? We're talking about MicroStrategy with Michael Saylor. We briefly discussed it during the Q&A before. They are acquiring a lot of Bitcoin. So this stat is from December 2024. So they back then held 439,000 Bitcoin, so quite a decent number. And they keep acquiring it. Michael Saylor is almost on any Bitcoin podcast, and yes, it can be debated whether that's good or bad. However, it's the fact that they are doing it. Then we also saw a push by Amazon shareholders to allocate 5% of their treasury into Bitcoin. That was rejected though. That was also in December 2024. Then we had Microsoft shareholders also discussing it amongst themselves. They also rejected it at the moment, but again, not completely ruling it out. And now we also have a company called Metaplanet in Japan. Thanks. They would like to sneak in, I know. Yeah, so Metaplanet, that is also starting to be like the Japanese micro strategy, like they call it. So they are also starting to amass a lot of Bitcoin. And that's why, I mean, it's really laughable if you talk about only small companies, because, I mean, come on, these are one of the biggest companies out there, which you saw when we looked at the largest assets overall. And I mean, every day I see a new LinkedIn post that some company has become a Bitcoin treasury company, the first in the Netherlands, the first in Germany. We're just waiting for the first in Switzerland. And I mean, they will have a lot of market cap or first mover advantage in being first. But I mean, sooner or later, more and more companies will start adding Bitcoin also to their reserves. But the story goes on. In 2021, it's only small countries that use it, so it's not really that important. So which small countries are we looking at? El Salvador, obviously. They were the first country to accept Bitcoin as legal tender back in 2021. Then it was found out that Bhutan has been quietly mining Bitcoin for years because of their hydropower that they have. They have very cheap electricity, so it makes a lot of sense for them to use this otherwise unused energy resource to mine Bitcoin. I think it was, where was it? We had a panel also on the treasuries where we discussed whether the country then holds it actually for the population or just the king for himself. I mean, yeah, can be debated as well. However, they kept it secret for quite a while because they are also understanding the game theory here. The more it becomes known that countries are looking into it, the more others will feel pressured to do the same, and then the global race of Bitcoin accumulation will begin. Yeah, unfortunately, by reasons that are also being discussed quite diversely, El Salvador reversed the whole legal tender thing actually in December 2024. However, they are still following a Bitcoin strategy, and the president keeps accumulating Bitcoin, but it's just not officially legal tender again. So they made a deal with the IMF that's also being widely discussed. Like they said, they will keep buying Bitcoin. Yeah, the story goes on because now we can see that the media changed its narrative to, yeah, I mean, only BlackRock, Fidelity, and 9 other spot ETFs are using it, or providers are using it. And I wonder what they will come up with 2025. It certainly will be interesting how this narrative evolves over time. But I think it's still crucial to understand how much we are subconsciously being influenced by all the headlines, because a lot of people, I mean, I experience it unfortunately a lot. I mean, I tend to advertise my events, right? Sometimes I post into women groups, and there's always this one woman who's like, oh my God, Bitcoin is being discussed here. It's time to leave the group. And I think it's really, I mean, maybe they don't like me, I don't know, but maybe it's also because they really think I'm some scammer who wants to sell something. And then, I mean, I just had an interesting WhatsApp conversation with someone who was like, yeah, you know, with people like you who are recruiting other innocent women for Bitcoin. And I was like, is it my job that I'm a recruiter now? And I really try to stay calm and explain and stay neutral and objective, but yeah, it's difficult. I mean, there is a lot of information out there and also a lot of scams. I mean, that's a fact, but I think it's important to understand like where the scam comes from and who the scammers are, and that Bitcoin itself is not a scammy network, but that there can be scammy third parties or scammy users. Yes. So here we can also see the total cumulative flow of the Bitcoin spot ETF of BlackRock. So it, as you might know, it has been one of the most successful ETF since launch. So it was launched in January 2024, and it has grown to over 60 billion in use. And there was a question during the break, and I think it's important to also answer it here, namely, does it make sense to buy a Bitcoin ETF to get started? And here it's just very, very important to understand the difference between a Bitcoin spot ETF and real Bitcoin. Because what's happening here is that it is merely a derivative of Bitcoin tracking the price action. So if you, for some reason, which is fine, are not in the Bitcoin mindset and are still hoping for some fiat gains, that's okay. You can buy the spot ETF and you can profit from the price growth, right? Or if you are someone who doesn't trust yourself with the private key management for whatever reason, yes, then obviously you can invest in Bitcoin spot ETFs. However, you have to be aware of the fact that you are not holding Bitcoin. It's BlackRock, where you must trust that they actually hold the amount that they are saying in custody, that they are not losing the keys, that there is no mismanagement, that they are not emitting more spot ETF Bitcoin than it's actually its underlying treasure. So you just need to be aware of the difference. However, I think it still has legitimatized Bitcoin into like traditional finance, because now companies who might be very restrictive when it comes to direct Bitcoin investments feel more comfortable in investing in a asset that has at least been accepted by traditional finance. Yeah. Yeah.
Maybe it's better to tell other people that you're not invested in Bitcoin and hold it yourself.
Yeah.
But to say you are invested in ETFs
Yeah.
or whatever, because
For
nobody
yeah.
will rob you. Or
Oh, sorry. Yeah. So I can repeat. So yeah. It's very valid. So the comment from the audience was, maybe it's better. Thanks for the light show. So maybe it's all good. Maybe it's better to not tell anyone that you're holding Bitcoin in self-custody and rather say you're holding it as an ETF. That is true. Because, I mean, right now it's still small, but who knows where it's going to be, what happens if Bitcoin hits 1 million, 10 million, if that ever is going to happen, right? We don't know in the end. But, I mean, for security reasons, yes. And I think there was also a very famous guy on Twitter who suddenly declared, yeah, I moved my Bitcoin to spot ETFs. And it was also highly controversial at first and being discussed in the community. But the majority tends to believe he did that for security reasons, so that he doesn't become a target for like personal attacks. Yeah, I mean, in the end, you know, like... I mean, I understand that there are security concerns and privacy is a really big word in the Bitcoin community. However, I think it's important to also find a balance between like paranoia and security, but still getting started somehow. Because what happens if you're too scared and you don't get started? I think that's also a risk. Maybe not financial advice. Yeah, so yeah, we can discuss also later. But I think it's for sure an interesting topic. Yeah. Okay, let's look at the time. Yes, still in time. Yeah, and there's this interesting phrase called gradually, then suddenly. And if you hear a Bitcoiner say that, what they usually want to tell you is that there are a lot of game theoretic dynamics in place. Meaning that when one country adopts Bitcoin, the pressure increases on others to follow. And the first countries are embracing Bitcoin. This is already happening, which could encourage others to do the same. And now, I mean, here we are not talking about drug dealers anymore. Here we are talking about states using Bitcoin as a network. Large-scale investors are increasingly recognizing Bitcoin as a long-term asset class. And I think, like I said in the beginning, or like a bit before, the approval of Bitcoin ETFs provides easy access for the broader public or for maybe institutions who are not allowed to hold Bitcoin directly. And then most important, the snowball effect, right? Because in the end, no one wants to get left behind. And if one country or one institution adopts Bitcoin, others feel the pressure to follow. And there the game theoretic race starts, and the cost of not adopting rises as others benefit. And there you can really start thinking about all these geopolitical dynamics, because as I said, I mean, Bhutan kept it secret for quite a while because they also wanted to accumulate it probably at lower prices, even though they're mining. I'm not sure if they're also actively buying. And every new participant in the network reinforces Bitcoin's role as a global asset, so that at one point there's going to be this tipping point where at the moment we are still in the gradually phase where it's gradually being adopted until we reach this tipping point. And then I think the acceleration of adoption will be beyond comprehension. This is what some people say, that we cannot even begin to understand what it will be like once the race to accumulate starts before it's too expensive. And I mean, the snowball is definitely already rolling, and those who wait risk being left behind, right? So this brings us to the crucial game theoretic question, who's next? And like I said, El Salvador dived into it. It was the first nation to officially embrace Bitcoin. And now the question is always which institution will be next. And I think at every major Bitcoin conference, people or the audience is waiting for the next announcement, like which country is being on stage saying, hey, we are now entering the adoption. So what we can say is that the Czech National Bank is considering Bitcoin. Then back in March, the Swiss National Bank actually rejected the idea of Bitcoin, but the debate is ongoing. There's also this initiative going on. And then Trump is not a fan of Bitcoin in 2019. But then in 2024, he even congratulated a happy 16th anniversary of the white paper. Vote Trump, right? That was part of his slogan. And then on March 2nd, so just one day after the Swiss National Bank rejected the idea, Trump announced that they will start building a strategic reserve in the US. And I mean, I think people cannot even understand what this means. I mean, that a nation like the US is starting to give so much legitimacy to Bitcoin, which was laughed at merely years ago. I mean, I think people cannot comprehend what this actually means. And yes, he's also mentioning other cryptocurrencies there. There are some reasons that I'm not going to mention now. However, it's certainly going to be an interesting next few years to see how this is going to evolve. And this then brings us to the question, when are you going to buy, right? And as Cici, he's the ex-CEO of Binance, says you can buy Bitcoin after the US government is done buying or before. There is no other choice, so the choice is yours. I think it's an interesting message to also take home with. Again, this is not per se endorsement. I mean, you need to put in the work to understand it because it is volatile, it is highly controversial still. However, I think it's just worth it looking into it and trying to understand why this institutional and also government state adoption is slowly but surely starting to take place. Yeah, and now as a last visual for today's presentation. So in the past, we used to be on a gold standard. And now we are in this fiat in-between world. And the question is whether we are in the future gonna be on a Bitcoin standard. And I think only time will tell. There's no security in the world, right? There's no 100% security that Bitcoin is going to be it. And then also the question for how long. But it's theoretically and intellectually at least super interesting because it takes you on a learning journey. It makes you question a lot of things. It allows you to learn a lot of new things. So I think it's definitely worth looking into, which is why I'm standing here. Good. Some pictures being taken. All right. One more. Good. Perfect. So that's why I want to leave you with a couple of takeaways, what you hopefully learned today. So we talked about decentralization, scarcity, and security, and these principles make Bitcoin unique. It's not just an investment, but a monetary revolution. We looked at how Bitcoin is fundamentally different from altcoins, and we saw that institutional and nation-state adoption has arrived. We can see every day that Bitcoin is reshaping finance. It's being discussed in governments all over the world, far beyond the few examples that I showed you here. And yeah, the choice is yours. So I would say thank you for being part of today's session. I hope you learned something. I hope you found it valuable. I just want to emphasize that I'm super approachable, so please do share some feedback with me, either directly or you can also write me an email. You can visit my website. I would love to hear comments. Yeah, and we still have time for some Q&A before we need to let all the guys in. So. Yeah, and just, sorry, also next week, right, on the 29th of October is already my next event in Zurich. So I have 5 amazing ladies on the panel with me who are going to talk about their journey to Bitcoin, maybe the risks and pitfalls that they encountered and what fascinates them about it, because with that I'm really trying to show the diversity of women who are actually in Bitcoin and hoping to inspire people in the audience. So if you happen to live in Switzerland and want to come by, you're always welcome. And with that, my presentation is officially over. Thanks for your concentration, attention, and for being here. And yeah, I will take some questions. Yes, there's a question in the back, and so 2 questions. They're being impatient out there. They will be amazed when they will see all the women leaving. Yeah, I need to. I will take a picture, but I can also listen. Go ahead.
So just tell us quickly about Bitcoin and taxes.
Ha, quickly about Bitcoin. Oh, I think quickly you should have left out the quickly. No, so when we talk about Switzerland, you have to declare Bitcoin in your tax statement, whether you hand in a screenshot of your balance or however you do it. It's pretty open so far. You just declare it under other stuff. For companies, as far as I know today, I'm no legal expert, but you will be taxed for capital gains if you hold it as a company, which is why it might be a bit more favorable at the moment to hold it as a person, but legislation might change as Bitcoin adoption will also change. Yeah, so exactly. So if you hold it as a person, you will just be taxed at wealth percentages. So if you own 10,000 worth of Bitcoin, this will be taxed under wealth, but not the capital gains if you bought it for 1,000 and now it's 10,000. But as a company, you would be taxed for these price increase paper gains. Yeah, yeah. But look into your own legislations, please. Ask your tax advisor. Yeah.
Thank you so much. It's very, very interesting. And I live in San Francisco, so there are so many women who adopt all crypto. It's crypto per se rather than a maximalist Bitcoin environment. But my question to you is just on a technical side. Mm-hmm. So I think this puts a lot of people off, is actually trying to acquire personal Bitcoin crypto and then the storing, the ledgers, etc. So I just wondered how, in your experience about other people, I'm not saying personal, do you capture your Bitcoin or any of the other cryptos? How do you store it? Do you have your own method, and just curious.
Yeah, I mean, again, I just hope to keep it short, but I mean, first of all, I mean, it depends. How old are you? How much is your total wealth? How much of your wealth do you have in Bitcoin? Are you a responsible person? Do you have Alzheimer's, beginning of Alzheimer's? I mean, it's a serious question to ask yourself, right? Are you able to take this responsibility? Are you willing to take it? I mean, best practice obviously is always Bitcoin and self-custody. That's what it's all about, that you have total control over your own money and no one can censor it. However, I am aware that it might be a bit complex at first, at least for some people. So what you could also do is to have different setup, a part on an exchange, don't kill me please, a part in an ETF, a part in self-custody, different hardware wallets, different mobile wallets to split it up. But I mean, each step adds complexity. So in the end, it's going to be a super, super individual decision how you're going to store your wealth. All I can say is what's best practice, what you can do in order to make it as secure as possible. But in the end, the decision will be yours. But I do believe it's important to not be too scared of it and just to get started and then continue learning on the way, as there are a lot of new innovations being introduced, I mean, almost on a daily or weekly basis. And it will also hopefully in the future be a bit easier.
Yeah, can I add to that as well? Thank you. That, you have to look at your will as well. It is an asset.
Yeah.
So, it's serious stuff.
Yeah.
It's play, but it's serious.
Yeah, yeah.
So,
yeah. I mean, inheritance is in fact a very, very hotly debated topic, right? How do I ensure that my Bitcoin will be passed on to my heirs? But I mean, we cannot discuss it now, but I mean, I'm around and we can also grab some lunch together or coffee and we can exchange ideas. Now you also know each other, so make use of these connections and discuss with each other. Yeah. Any other questions? There was one, no? Yeah, one question.
Sorry. Thank you so much for this absolutely gorgeous presentation. I'm a beginner, but it sounds like this is going to be, I mean, if this is a new global monetary system, this is about transfer of wealth in a very massive way.
Yep.
I mean, how are governments ever going to accept such transfer of wealth? That I'm sorry, but it's like I'd really love to believe all this.
Yeah.
But I'm like, surely there's going to be some legislation that is going to try and I don't know what.
Yeah.
But so do you have some thoughts?
They might not have a chance, because I mean it is already happening. It is already happening, and had they wanted to stop it, they should have done it like 16 years ago. So they should rather try to start playing along and find solutions for themselves, because at this point it's almost unstoppable. But in the end, we don't know. I mean, I don't know, right? I mean, I don't have all the answers. All I can say is I read about it daily. I listen to a lot of different opinions. We won't know what's going to happen, but I think it's important to pay attention. Yeah.
Thank you.
You're welcome. So I think with that, we have reached the patience of all the guys out there. So thanks a lot. Like I said, feel free to give some feedback and then see you around. My cards are up there.